I was just chatting with David Kudla, CEO and Chief Investment Strategist at Mainstay Capital Management. And I'm so glad he's here in person to tell us about some of the themes. You're optimistic on 3 themes I saw. All right, so what are they?
So we think right now our investment thesis is based on 3 main themes: the AI story, AI stocks, and then emerging markets and commodities as a diversifier, because we're not very favorable towards bonds right now.
I saw that, and your commodities also include agriculture and things like that. So let's break it down a little bit. I mean, I was just looking at both the NASDAQ and the S&P. They're both around the unchanged line, a little up, a little down for the week. What's your big picture on this market?
So our big picture on the market overall, and I know there's so much concern about this magnificent run in AI stocks and tech, and there's been these comparisons to the dot-com era. But you know, as we remember back then, the dot-com era was earmarked by companies who had no earnings. They're being priced on number of clicks, maybe just a business plan. And now we have these very strong companies with fortress balance sheets, terrific earnings for the first quarter that we just saw. So it's a different story, and we think that the AI and tech stock run has a lot further to go with these, magnificent run we've had already.
Look, when you talk about AI and those kinds of names that could move higher, let's talk about within that group, right? It's not all the names. How do you pick and choose which ones are the winners, and what would be some winners in your mind? Right,
so we think, we've got the usual suspects: Micron, AMD, abroad, Samsung, and Hynix. But we think that the way to play it is through an ETF. 2 ETFs we like are the Chat ETF from Roundhill and AIS, and those are focused squarely on the AI space. And we know there will be winners and losers. There will be a shakeout, like back in the dot-com era, like we've had with all of these sectors that have rallied over time. So if we buy this group, a commingled pool, if you will, through an ETF, we get a very good play in the overall sector without that unique company-specific risk.
You've had these for a while. I mean, you've owned these for a while, right?
Yeah.
And you're staying in. Have you been taking profits? And
no.
You stay in because you still think there's upside?
Absolutely.
Yeah, so one is the Gen AI and tech, and the other one's an AI super cycle, so Chat and AIS. I'd had those. Now, the War ETF, you said really isn't about aerospace and defense stocks.
It's, well, we love the ETF. Because we liked defense stocks last year.
Right.
We like the AI trade. We've been in it for quite a while as well. But its performance right now is coming from Micron, AMD, those AI stocks in the space. And it is global technology and defense and aerospace. So it is in the title. It is part of the charter, but and it's up over 30% year to date, which we can't be too disappointed in anything that has that kind of return this year. Yeah,
understood. When we think about, and I still want to get to commodities and emerging markets, but what's the story and when you hear the fundamentals from a lot of the companies? I mean, we're sort of getting through earnings season. We've been through the biggest part of it. How do you feel about the earnings?
Yeah, so there's been this concern about the Iran war, just quickly, that's really more noise at this point, and it's going to drag on, but the market's carrying less and less as we've seen these days where the market advances. And the way we look at specifically AI stocks, it is not just another technology boom. This is really a technological revolution. There's going to be just miracles in productivity. It's going to transform society as we know it, between humanoid robots, combination with AI, all of that. So when we look at earnings, the earnings for the first quarter have just been terrific. So while people are concerned about the price increases, PE multiples haven't expanded significantly because earnings are keeping up. So they're not really overextended.
Yeah. What about something like SpaceX, for example? I mean, are you going to get some SpaceX before it goes for the IPO, or are you going to definitely want to get in there at some point?
Yeah, we're looking at, there's actually a space ETF that we've been looking at and thinking about, a couple in that space, no pun intended, a couple in that space that we've been looking at, as we go through in our research, where are next opportunities. Right. We're tactical asset allocators at Mainstay Capital Management, and so we're constantly looking for opportunities for advancement. and
so you're
in portfolio
you
and
want to find
diversification.
something like that. You want to find some SpaceX. Okay, what about the commodities? You were talking about agriculture. You had HGER was something you were interested in. Tell us about that.
Yeah, HGER, and like last year on the show, we were talking about gold and silver, which we have liked a lot through 2025. We still like gold and silver as a good diversifier and for opportunity. What HGER, the Harbor all-weather commodity fund, does for us, it gives us that diversification with those AI stocks, with the rest of the stock market. And you take a day like yesterday, everything was red, bonds were red, stocks were red. HGER, that ETF was up 67, about 2/3%. So that gives us the diversification, because we really we don't want to be in interest rate sensitive bonds right now. We've got the 30-year now poking above 5%, the 10-year heading towards 4.5%. Inflation came in as expected, but 3.8%. We're running at high inflation. So, you know, rather than bonds, we're using commodities to diversify portfolio and getting great returns while we do it.
And do you think commodities continue to go higher? Is that, you know, part of the story, the agriculture, you know, story?
Yeah, we think there's a long-term secular bull market for the metals, right? Because of fiat currencies, things like that. For agriculture, flows through the Strait of Hormuz. So we're seeing a lot of agriculture products, because it's about farmers deciding what to plant, and then if they do, without the fertilizer they need, they don't get the same yield. So we're seeing wheat, corn, soybeans going higher.
All right, and for emerging markets, you had EWY, EMEQ. Those were some of the areas and names that you like there for the ETFs. And just a big picture on the inflation prints we've been getting in the economy. Are you worried? I mean, the PPI came in today. It obviously saw a big increase. I know the CPI is a little more important to folks, but the PPI came in today up 6%, the biggest increase since 2022. Are we worried about inflation, or not so much right now?
We are worried about it, because as long as the Strait of Hormuz is not opened up, we have that threat for higher inflation. But we're high now. You know, CPI is higher, or PPI, the number you quoted, that tells us what's coming down the pike. So we've got to keep a very watchful eye on inflation, because that's something that certainly could dampen stock performance over time, and certainly bond performance. And so we just need to be careful about that in our portfolio construction and our asset allocation.
Yeah, understood. Thank you so much. David Kudla, CEO, Chief Investment Strategist at Mainstay Capital Management. Great to see you. Thank you.